Good day, fellow investors. Egg prices are on anyone's lips, so let's discuss the bird of the month. In other words, small cap, high growth, organic egg producer stock. And I'm talking about VITL Farms. So the stock is doing well, especially over the last boom, but still a P ratio of 26 for what they expect 20 to 30% growth going forward. They have a very interesting business model, pasture raised, organic, and other eggs, also some butter, in working with local farmers and producers and distributing that across the states. And here is shared by Logan, very nice explanation of what the company is, so how they have been growing their egg products over time. They have constantly been doing that for over the last 7 years, and they project to keep on doing that over the next 7 years. They have distributors, Whole Foods, Kroger, so pretty well mixed and likely to be in growing demand over the future. 6 million eggs per day, which is something significant. They have investing in a new MOBA egg equipment upgrade. MOBA is usually where my mother translates when people from across the world come to purchase that egg equipment. So, guidance growing 22% at least, EBITDA, capex, so positive also cash flows. They can finance things themselves. By 2027, they expect to reach 1 billion in revenue on good gross margins. And if they go to 100 million, let's say, in free cash flow, that's a free cash flow yield of 10% for likely more future growth. Of course, the risks, they have one packaging and washing facility, now they'll have two, avian flu, things like that. Commodity prices go up and down. Then there are other brands, competition coming in. But for now, the balance sheet, they have no debt. They have strong cash flows. Everything looks very good. This is how my platform members describe something. And here we have the opportunity consistently and profitably scale at 20% per year, and it's likely that if they continue doing like that, then we are looking at 2 billion market cap in a few years, and then even perhaps higher. In that case, the company will continue to trade at a premium and could 3x. And this is now here the comment, so just for me to research, and in this case I'm happy to share this research also on YouTube. So let's start with the business. VITL Farms, you see the little dots on the eggs, usually very nice design here, but they have this model, conscious, sustainable, community, organic, whatever is really trendy now and will likely continue. If I would buy eggs, I would certainly buy the organic ones from them. Now, they have organized how to produce because it's pasture, so it has to be outside, land management, whatever. They are cooperating with more and more farms, and then they are also increasing the retail and food service going forward. They are increasing their brand awareness over time with marketing, and there have been some egg bites discontinuation, for example, top butter supplier changeover, but despite those setbacks, they have managed to keep on growing. They're also expanding the retail, so just working as a normal growth company would work, plus they are doing it with great financials, positive earnings, positive EBITDA, positive cash flows. Everything from that perspective looks really, really good. Of course, we have to look at the average price of eggs, and there has been really a boom recently, and even St. Louis Fed has showing egg prices, but this was already happening 2016. I remember that. Then it's subdued, then we have another boom, subdue, now another boom. It is likely that this will again normalize over time at constantly higher prices as inflation simply increases the cost of production, labor, etc. Now, this might be exuberant, it might revert down, but from what I understand, they have long-term contracts, and again, as egg prices crashed already, they just keep on growing. So you see what is in the news, but not everything is traded like that. And you see good numbers, good gross margins, increased a little bit with higher egg prices, operating income as they scale increases, and everything looks pretty good. If I look at the balance sheet, 359 million of assets, and if I look at the debt, there is no debt. The additional paid-in capital, there have been some stock issues, of course, as they are growing, and not much, 14 million. The last one was likely at IPO here, but the guidance is very positive. EBITDA, capital expenditures, that should then leave 50 million in free cash flow, which is a really good number. If they reach also this, that's even higher numbers in free cash flow. Note that minus taxes, cash investments, 100 million free cash flow is possible. Compare that to the market cap here, and for such a growth company, it would be very cheap. Now, I kept on looking, digging, so here is the growth. There is this stock-based compensation expense, 6, 7, 10 million. I would prefer it not to see it, but okay, it is what it is. However, imagine they have contracted laying hens 6.7 million. Imagine that you have 6.7 million of contracted laying hens. I find it hilarious, but okay, it is their business, what can I say? The hens sign the contracts. Never mind the jokes, they are expanding, doing what they have been doing in the past that has been working well, and if they can just keep on doing that, we should see especially good numbers ahead as their market is likely to grow, because you would not know what is within those industrial eggs. And also, when you compare the growth and the valuation, they are very cheap relative to other food stocks and peers. You see here also we have good cash flows, which allows them to, let's say, invest without requiring further investments. Now, I go always, when I dig deeper, into the Security Exchange Commission filings, and I see a lot of changes in beneficial ownership. Okay, that's something that can be a red flag a little bit when it comes to these smaller businesses. If you remember, we analyzed things like, what was it, the Very Good Food, that was a total scam. But I'm looking here, and the CEO as president, disposal 1,500 shares, disposal 1,500 SVP strategy, Bal Joanne, head of impact, disposal of stocks, chief financial officer, disposal of stocks, and president CEO, disposal. Of course, he has a lot of securities there, but again, disposing. And then I looked a little bit further, January, more disposals for the executive chairperson there, chief marketing officer. So you vest those options and you acquire them at $3 and you sell them at 40. A lot of insider selling. Let's dig deeper. President, CEO, again, acquired at $0 the stock-based compensation, and then he will later sell. Then I went to a page that accounts for that, and I see this, that it is mostly selling. And then if we look at the chart over the last year and a half, since the stock went up, they sold 406 million of the company. Whoa! As the stock went up, they sold 406 million, so they sold 30% of the company, which means that they likely know that this is temporary. This boom is temporary. There will likely be smaller growth. If not, they would not have sold as the stock exploded. So it is clear it is cyclical, and they are just discussing what they are doing. so will be more and more, so they are growing, they're laying hens, etc., etc. But they say they have 0 outbreaks of avian flu, but you never know how can that turn on you maybe over time. However, what I want to discuss here is when it comes to new businesses, I usually make an analysis, understand the cycle, and I don't know much about laying hens, never had a contract with a laying hen, but I looked at the egg prices and the fact that everybody was selling, that they sold 30% of the company, tells me that this is just a temporary situation. Of course, they are marketers, they will market their company at best, but if the business is really good, there is time to buy it. I don't need to chase it. So I will follow, you will follow, and if egg prices go down and the stock price returns to normality, then we might look again into it and see what the management is doing. Maybe they'll start buying. So you keep a list of many or just a watch time as I do my videos. And when something crashes, I'm constantly reminded, no worry. That's also a reason why I do these videos. And then in the comments, as we have on my research platform, as you have seen, there are always great comments where I always learn something new. So I want to see these prices come down. I see even Trump was bothering with egg prices. So maybe the hens will start to lay more eggs to show him some love. We'll see about that. But again, maybe a bit more normalization here to see, okay, let's say they make 60 million foots of free cash flow, 900 market cap. So let me know when it's 30% down, especially if egg prices go down. So I hope you enjoyed this small cap analysis, growth stock, but there is always something hidden, and then there are the factors that we have to watch. If it is really a great business, then we have plenty of time to understand the cycle, to follow the cycle, and to invest at the right time. But this boom in sales, maybe after IPO or something like that, is something to watch because the management shows us what they are thinking about the cycle. Thanks for watching. I'll see you in the next video tomorrow about coal.